Paul, take us through the numbers. Why did things go in the wrong direction?
A big surprise. Now, I think economists expected an uptick from January's level. One reason is that tax holiday, you'll recall the sales tax holiday that was in place over the holiday period, it expired in the middle of February. So when it did, the expiration of that tax holiday had an upward boost on prices. But economists knew that coming into these numbers, and the numbers were nonetheless a surprise. The annual pace of inflation in the month of February, according to StatsCan this morning, 2.6%. That was much higher than the 2.2% that economists were expecting. And also, StatsCan says that if the tax break had not been in place at all during the month of February, the rate of inflation likely would have been 3%. So all of this comes as a surprise to economists, and likely a surprise to the Bank of Canada again, as well. Puts the Bank of Canada in a difficult position. As we know, the Bank of Canada is in cutting mode right now. It has cut rates numerous times since June in an effort to give an upward boost to the Canadian economy. It does not certainly want to have to pivot to raising rates to tame inflation. So we'll continue to watch this. I spoke with an economist this morning, and he was surprised at the number, but he did say that the tariff situation is likely to drive inflation higher in March and subsequent months as well.
And that was going to be my next question, because those numbers don't reflect the full impact of the tariffs yet. So, Paul, potentially, what does it mean for future bank rate decisions?
Well, the bank is going to have to tread carefully now. It's going to have to look at the data very, very closely. I'm sure the bank is hoping that this is a blip, and that in March we see perhaps a moderation, but as you suspected, March is when we may begin seeing some tariff-related impact on the pace of inflation in Canada. That's to say that retaliatory tariffs that Canada has put on U.S. goods coming into Canada will have taken effect to some degree. They will cause those prices to rise. And in April, May, and subsequent months, the tariff impact is likely to be larger still. So it's a difficult position for the bank, which again, is currently cutting rates to stimulate the Canadian economy. It may call into question, Marcia, how long the rate cuts go on, and perhaps we'll see a period of the Bank of Canada standing pat on rates until this calms down.
Paul, thanks for that.
Thank you.
Bloomberg's Paul Bagnell just ahead.